What's up? Good afternoon. Thanks for jumping in. And if you're watching this on replay, thanks for checking out the video. All right. Cool. I got somebody joining. As you come in, please like the video. If you're watching this on recording, be sure to like the video because why not? Cost you nothing. All right. So what spurred today's video? I don't want to be like YouTubers. Like everyone's been asking me about my latest makeup routine. So what spurred today? I'm doing a couple of talks. What's up, Melissa? Really cool news, actually. I need to text y'all. I'm gonna be in chat this week as opposed. I thought I was gonna come to Chattanooga. If anybody, oh, you know who else? I got a few folks I gotta connect with. Jay, maybe Jay pops on here today. I want to try to connect with you in Atlanta. But yeah, so I'm going to be in chat before Denver, speaking in Denver, and then speaking in Thailand. I was trying to figure out when I'm going to be back. All right, so, but it's funny enough, the reason that we're on this video is I did a podcast interview, and then it's not out yet. It'll come out sometime later this year. Oh, let's turn this noise off. So it'll probably come out like later this year. But one of the focuses was our strategy in crowdfunding. I'm in the middle of the city right now, so there's going to be background noise, and it's just like window pane. So I apologize for that. But we've been using crowdfunding. The first real use where I was involved in, acquisition / exit was with Peppy One. So that was, I guess, 2.5 years ago, maybe. But we realized at that point, like, hey, this is a really cool tool for acquisition. I really hadn't talked much about it. I think at that point, I talked a little bit about it, that particular deal on the channel. But since then, we've used it in half a dozen different scenarios, whether it's helping clients almost in not in every possible scenario, but in a lot of different scenarios. I've been a part of these transactions. So the Peppy one was actually an exit. So we were using crowdfunding to actually one of the GPs in that fund wanted to buy one of the businesses that was in the fund. So basically the GP was a part of PEFI. We're closing the fund and he wanted to buy it. And so that was kind of the first time we went through that process. So a little bit of a complicated scenario, but basically I'm one of the GPs. He's one of the GPs. I guess in that one, there were 2 or 3 other GPs. And he did a crowdfund to raise the funds to buy that business out of it. Interesting enough, he's doing a crowdfunding right now as we're exiting it. And so we'll kind of skip 2.5 years later. Then I was a part of a Shark Tank knockoff kind of thing in Colorado, which funny enough, it's just interesting how things line up. So I'm giving a talk at an event in Denver that's the same kind of event, and I'll be a shark again at this event. And so in that scenario where basically I was a shark, I invested in this deal, and then that deal ended up doing a crowdfunding campaign to raise capital at a higher valuation. But long story short, we've had all of these different scenarios. So when I'm giving these talks on it, I kind of go through these case studies. But the cool thing here that I want to talk about is it's like, number one, letting y'all know that this is a possibility, finding out questions that you have, because I think it's just underutilized. When you look at those platforms, everybody on those platforms are raising tons and tons of money. And the unfortunate thing is that most of those businesses are going to fail just because they're startups. And just it is what it is. They're literally games in casinos that have better odds than your odds when you're starting a business from scratch. Hey, as y'all come in, I'm going to go through these comments in a minute, so feel free to put any questions up, and be sure to like. Be sure to like the video, pretty please. It makes me just feel so good. But yeah, this is an underutilized thing. And so, we've kind of been quietly doing it. But that podcast was the first time I started talking about it. And then I got asked to speak at a few different events, which I hadn't. It's been a while since I've done speaking outside of our events. And decided to kind of focus on sharing some of these tips. So I'll give y'all, number one, the opportunity, and then tell you just how to take advantage of it. So number one is the opportunity. As a lot of y'all know, I have a publicly traded company. And the reason that people go public, despite, let me tell you, like I can't even describe to y'all the headaches. The headaches are so endless and numerous and so much work that we never imagined having to do. But there's so much work involved. But the reason that people do it is simple. It gives you a lot more, a lot higher, I guess I should say, valuation. And so if you're in a business, and we buy businesses, as most of y'all know, in a 3, 4, multiple kind of range. Great question. I want to get to that in a bit. But if you're in buying a business at a 3 multiple, very high would be a 4 multiple, maybe a SaaS business. And you can go to another market and sell it at an 8 multiple. That automatically doubles the size of your business. And if you're able to sell it at that 8 multiple, then you're basically in a situation where you didn't have to do anything to that business and you doubled your money. Now, that's double if you're paying cash, which if you follow me, nobody on here should be paying cash for their existing business. So you're going to have some level of leverage. We're doing a $1.5 million deal through Good Merger that we're helping a buyer buy right now. And, he's going to put down 10% on that. And so if you look at a deal like that, if you have, $1.5 million business, you can buy it with $150,000 down, then you just go to another marketplace and sell it at an 8 multiple. You have turned that 150 to a $1.5 million profit. So that gives you kind of the importance of multiple increase. So when we're going from a private market to a public market, the multiple there is in the 20 range. So if you can take a 3, 4 multiple deal, turn it into a 20 multiple deal, that is a really powerful thing. Now, what we're seeing with crowdfunding is that basically you're able to do these deals at a very high multiple, depending on what the trajectory of that business is and what you think can be justified. And so you can literally have, basically raise capital at a 10 multiple. So this is valuable on the front end and the back end, because if you're buying a business, if it's on the front end and you're buying that business and you can raise capital at a 10 multiple, but you're buying it at a 2, we're trying to do deals at 2. You're buying it at 2, that's 5x what the business valuation is. And it's because of the market that you're in. Now on the exit, that becomes interesting as well. And so that's what I was talking about with that first Peppy deal that we did. Now the person that bought it through crowdfunding is going to be exiting through crowdfunding as well. And so I had a piece of that business. And so it increases the valuation of that. And just as an example, with the Shark Tank deal, we invested in a $400,000 valuation once they were approved on one of the, I guess it's top three crowdfunding platforms. They were able to get a $4 million valuation. So as a passive investor, that 10x the value of my investment. So those are some numbers around it. Now let's talk about just how you pull this off. So it's a lot of work. It's not, but let me tell you something. It's maybe 1% of the work of going public. So if you ever dream of going public, Like this should be your training wheels. I did the opposite. So we kind of started the publicly traded thing before doing crowdfunding. But it made, like, when, my partners and the different people that I've been involved in different transactions with, as we go through crowdfunding, they would complain. It was like, oh my God, this is just too much paperwork. It's too much of a headache. I got to do all this stuff. What's going on? Like, and I'm like, dude, this is nothing. Like, this is easy breezy. So, like it's good training wheels. I guess I should say it's one of the things that I love is that they have made it pretty easy. So go in, understand that, if you've never done anything like that, it's going to seem difficult, but it's really not. But there is a process. It's not just anybody can go. It's not like a Kickstarter where anybody, not just anybody, but you can go. I think Indiegogo doesn't have any approval, but it's very easy. If you got a product, you're going to just pre-sell that product with equity crowdfunding. And what I'm talking about, you're actually selling shares of your company. So that, number one, is an important distinction. So you've got to get, number one, the platform approvals. Some of the top ones are WeFunder. Another one is Start Engine. There's another one that's in the top 3. It's not coming to me. And then there's like a bunch of small ones. There's basically 3 that are kind of the largest, and then there's a bunch of smaller ones. And we've used both. We've used one of the top 3. And then we've used some smaller ones. We're in the process right now of going through the process on a couple of smaller ones. And then we've also done something in the music space that was a royalty kind of platform. So we just have all of these different things that you can use. One of the neat things about this is that there used to be a $1 million, like $1,050,000 limit on the amount that you could raise. They've raised that to $5 million, which just opens you up. And there's just a lot of demand. Like even now, even as things have gotten skittish, I thought that because a lot of things are down, that a lot of people will be running from this kind of startup market. But I don't know the psychology behind it. And maybe it's just like, hey, if I'm going to lose money, I want to be a part of an interesting project. I'm already losing money in the stock market. I'm already used to losing money in crypto. Let me try something different. And then the other part is there's not real markdowns. And so, if you put money over there, it's not like the next day the Fed comes out with, higher rate expectations and your valuation goes down. And so that's one of the things that's really interesting as well. So, so demand, people are hitting that $5 billion mark on a pretty consistent basis. I really love the raises that are under $1 million. And so let's talk about the tips and why this is so cool for us as people that are buying businesses. One of the things that's really difficult if you're in a startup is raising capital in a crowdfunding atmosphere if you don't have any followers. Like if you haven't been in business at all, you don't have any followers on Instagram or emails and blah, 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 like you're starting from scratch. You're having to build an audience and then convince that audience to invest in you. So some of the people that have done really well are the people that already have their fans. The people that maybe they already have a product, so people love their product, or they've just built a brand, so people recognize them, their personal brand, whatever. Those are the people that do the best. Well, for us, we buy existing businesses. And so the really powerful thing is you've got existing clients, you've got an existing database, you've got existing social media followers. And so we will filter businesses. If we're going to use this strategy, we'll filter it based on that. So that's a really powerful thing. And so there's still just another process of what you have to take those people through to indoctrinate them. But that alone is just a really cool aspect of this. So once you find the right business, obviously I'm going through, this is a very condensed version of this, but you found the right business, you've gone to the right platform, and they've approved you, which is important, picking your platform and then getting approved are the two, I don't want to say toughest, it's just work that you've got to do. There's two parts of this that you want to go in knowing I've got to put in work. Once you get approved, the next part of this whole thing, and then there are tips to getting approved, but the next part of this is a lot of fun, I feel like, because now you get to build out your kind of campaign. And the first part of your campaign is the why. So you want to be able to pretty quickly convince somebody that this is the why behind why you think this is a great business for you to acquire and for them to invest in. Number two is why do, or in some cases, you may have already acquired it. Like a neat thing to do is you actually buy the business and then you put the money down, you get the money back that you put down. But why you're the right person to run it and why it's a really great opportunity. The next thing is having a really great business plan and a really great pitch deck. It's for me, again, it's a lot of fun because it's almost like consumer. You're not doing it for the most sophisticated investor. You're kind of putting on a consumer hat and retail investor hat and thinking about it from that perspective. And so it should be entertaining, quite honestly. You know, your video, like it should be engaging. You want to have people enjoy going through this process. It's the genius of what Robinhood has done. And you can do this the same way with your content around your platform. So what Robinhood did, and you know, hate it or love it, they gamified investing, and you know, just made it simple and made it fun. And so the other part of that is when we're talking about not dealing with the most sophisticated investors, you want to keep everything very, very simple. I was just having this conversation on one of our campaigns with my man who's running. I'm like, dude, you're making it way too complicated. He's like, oh, we can do this and then we can tell them about this and tell them. It's like, no, calm down. We don't want them to get overwhelmed. So you may have all of these, cool, crazy ideas and complicated thoughts about the business. You got to simplify it. And one of the powerful things is we get a leg up when we can buy a business that already has a great prospectus that's been built on it, and then we can use that as a foundation. Just throwing in some of the, I'm looking at kind of the notes here, throwing in some of the little tips that I give in the talk. Understanding and leveraging social media. You know, as y'all know, I am not a fan of trying to build an audience from scratch. But I am a fan of buying a business that has a great social media following and leveraging their following. And so again, this just is where you get a big benefit there. And then they've done some ads. You've just got people that are, the audience and who's interested in this business. And so you can, on top of that, start to figure out, okay, what segments of that audience are clicking on and paying attention to our campaign here. So there's some a lot of cool things that you can do there. The other thing is having a great brand. If they've got really great branding, if this is a $1 million business and it's some random affiliate site that has some crazy domain, and even though it's making a ton of money and it could be very profitable for the investors, those deals don't work. So thinking about it from the perspective of what's going to get people excited, which is important. And then the final thing here is, when you're doing these campaigns, you want to prepare people to be a part of your movement. So it's not just send me money. It's, hey, be prepared to help make this business grow and profitable. So your folks that invest, they can become ambassadors, and the best ambassadors that you could ever dream of, because they own part of it. They really are genuinely interested in the success of the business. Those folks may have recommendations for employees, could become employees, just everything that your business needs. You want to tie those people in. So I'll stop there. There's a lot to it, but I really just want y'all thinking this way, and understanding that there's a big opportunity there. All right. Have Melissa pop in early. I'll go through some of these questions. Chat, what's up, man? Thanks for popping in. Team Fuego, what's up? He says, I'm in California, and this is idea for how I understand things so far. How can I get started? So, the first thing is having a business. You've either got to have a target of the business that you're going to acquire, or you're going to actually acquire it and then leverage this. The biggest keys is filtering based on the success. So, we now understand, after going through this process a bunch of times, what's the platform looking for. So we're going to filter based on what the platform wants. We're going to filter based on what's going to be the easiest to advertise and reach their folks. What's going to be the most attractive, what's going to be most attractive. So we've got all of our normal due diligence. You're still doing the normal due diligence. This is important. It has to be a great business. And then you're adding to it crowdfunding due diligence. So we have we basically filter based on the knowledge that we've gained going through, like, okay. And then even after all that, you get the platform approved, all this stuff, like are we going to be able to raise the goal? Whatever the goal is that we need, do we have enough of those factors? Are they at a point that we could, achieve that goal? Saw this one come through as I was talking. Great. Let me call this up. So you need a SEC license to crowdfund in your country. I'd be curious what country you're in, but the SEC license, if you gotta be, SEC is in America, so it only controls America. So let me know what you mean here. So the SEC license is for the crowdfunding platform. The platform needs an SEC license to be able to offer this. And they actually go through the SEC, and they go through FINRA, which I've worked with FINRA, and I will say nothing bad about either organization because they're both amazing to fun to work with. But these crowdfunding platforms, they have to go through a lot to get the license. And then once they have the license, you don't have to go through and get a license to raise. So I don't know if you're talking about becoming a platform or what here. All right. Chap says they need yield. Everybody's looking for yield. I think we were talking just about where folks are investing. And everybody's looking for yield. Mr. J. Twitty, I talked you up, man. I thought you might pop in here. So, what's up? Hey, it's Ann Chappis in here as well. I'm in Atlanta watching football, resting up for another big week. We've got some big things happening, man. And I'm going to come through Atlanta, so we'll get to connect. We got some big deals happening, dude. Congrats to you. Also, if any of y'all are interested in Good Merger, feel free to reach out. We just brought our newest team member, Dan, out in Dubai. We're selectively picking folks, but we just good things are happening. Good things are happening there. If you're interested in becoming a broker with Good Merger, feel free to reach out. We do pay attention, and when we find somebody that's a good match, we bring them in. It's a little bit different. It's not like you can just pay to join. I'm in constant contact. We're talking to these folks. I've got valuable partners where it's really important that you're serious and just a good match, as far as your expectation. Would you be interested in doing deals in Africa? Yes, I am interested in doing deals all over the world. I'm actually not in the US right now, so I love doing deals all over. He says he's in Nigeria. So in Africa, I really want to spend more time there. I've spent time in Morocco. Believe it or not, I've spent time in Algeria. I can't remember if I've ever told the story here, but my Algeria is on a terrorist list. And they canceled my passport when I got back. It's like, it's suspicious. We don't know why you're there. And I had gotten sick there, and I was kind of just trying to get through the line, and was very annoyed. And they basically said, "Sir, come with us. We're gonna show you something in the back here," and canceled my passport. But it was, a very interesting trip. Got to meet with their version of our Fed chairman. Did some cool stuff in Morocco, but I really want to make it to South Africa. But no, so I love all kinds of deals. I still don't get the SEC license thing for you to raise on a platform that's US based. Maybe there's an additional requirement that you have to go through if you're international, but I've seen international businesses on those platforms. So at the very least, whatever again, all this stuff it's more regulation, it's more process, but this is what sets you apart. Like if you're willing, it's the same thing with us doing the public company. That's what I realized. The work that you're doing is what will set you apart and give you more opportunities. So if you're willing to do that work, that's what's going to set you apart. It's kind of this thing. And so I would just tell you, like, whatever the thing is, it's not, it's almost like me years ago before going public. I mean, I thought, oh, that's this insurmountable thing that other people do. Like, I can't do that. And so it's the same thing, even whatever the requirements are, like, people do it. And so you can be one of the people that do it, and you just go through that process. And we got a nosy visitor. What's up, RS? RS says, "What's your net worth?" I'm not gonna share that, man. There's just no reason to. I could even give you ideas, but there's just no reason to. I have a lot of stuff. But that's cool. There's definitely nothing wrong with asking that. And I think there's just so, I don't know. I don't feel like net worth is even the best measurement of what I don't really look at my net worth. I guess I think what cash flow is important. Because there are things like even my publicly traded company, like, if you add that to my portion, it's going to be a bigger number. But if I just tomorrow decide to go sell all my shares, that's going to plummet it. You know what I mean? So it's like, oh, today you can say, oh, that's worth whatever. I'm not even going to give you a number, but it's worth a lot. But it just, I would have to sell it very slowly over a long period of time. So is that, what is that? And then the other thing that I think is interesting is on private companies, you determine the valuation. Most of my stuff is private companies. Awesome, guys. Well, this was lovely. I didn't think this was going to be as long as a call as I call. I'm so used to being on calls, as long as a video as I thought. We got New York pocket watches, man. The pocket watches are out there. But hopefully this is valuable. I would definitely take advantage of the strategy. I think the work that is required, if you do want some help on the transaction, if it makes sense for us to get involved, we are happy to help the right folks. And that just means like getting you ready for the raise and that kind of thing. Thank y'all for checking out the video. Hope your weekend is amazing. And I'm excited. Headed back to America in a couple of days. Subscribe, like, follow me on Instagram. Reach out if you're interested in becoming a broker with good merger. Reach out if you're interested in our upcoming franchise fund. I think that's it.